I've got a great treat for you this week. As well as the regular data, got some new slides you're just gonna love, so don't go away. It's so good to see you here once again. And this week is week 24. We've got so much to go through with you. And I'll tell you what, there was an interesting conversation I had this week in one of the forums with a particular individual. And it really highlighted that there is a masterclass from mcl.club, masterclasslessons.com, the other way of getting to that area, that was missing in domain monetization. And it really was about the different types of traffic. And guess what I'm going to be doing next week? I'm going to be recording it. And you're going to love it. You're going to absolutely love of how I break down different types of traffic and the difference between things such as natural type in traffic versus natural traffic. And they're very, very different. And I think it's going to explain a lot of things for some domain investors. But anyway, as well as that, I also plan on recording another video as well from Masterclass Lessons, which is how to run a traffic test. Because it may seem obvious, but there's a good way of doing it and a bad way of doing it. And you want to do it the good way and get the great results. So I'm going to take you through that by adding a couple of more lessons. That means rather than the regular 10, we're going to have 12 lessons. And I wouldn't be surprised if that grows too. So many people have done masterclass lessons. It's great to have our partners linking to us and things like that. I really do appreciate that. And shortly you'll probably see some recommendations from various domain investors on what they got out of masterclass lessons. But anyway, without further ado, I want to get stuck into this week's numbers because there's some great stuff there. So let's take a look at that. This week's numbers. Okay then, so like I said before, it is week 24. So let's take a look what's actually going on. So week 24, this is the percentage change in revenue. Remember, anything above the red line is actually in growth. So we can see that there was a surge of growth. And right now it's sort of bouncing around, but still growing a little bit. If you looked at it very closely at the right hand then just there, and you can see that it just still is growing, which is great news for domain investors, which is always what we want. Okay, so normalized RPM and RPM trends, what's actually going on there? They're both been trending upwards, which is once again a great outcome, and it's something that I always get excited about anyway. But anyway, so we can see that they're going well. And what's going on with the click-through rates? Remember we saw across the last few weeks a real breakout in the click-through rates. It completely changed. And it's something which caught me by surprise, I must admit, and which is always a pleasant experience. But this graph is the 14-day moving average, and it really highlights that the thing that moved wasn't necessarily the CTR. The thing that moved was the earnings per click, which means there was more demand for the traffic, which is great. If there's more demand for the traffic, domain investors love it. So where did that demand come from? I postulated back in April that it came from the small to medium-sized businesses. But then as we traveled through time, the large corporates began to come back online and put pressure on earnings per click where they're fighting for earnings per click. And if you look at a lot of the data coming out of the large networks and even the likes of Wix.com and so forth, those big platforms, a lot of that feedback coming through has been, guess what? More clients are coming online, setting up businesses, wanting more traffic. And that's the bottom line. That's really what's been happening. And that's, once again, great news for domain investors, basically on the sales front, but also particularly on the monetization side. More demand is good. So what's happened with the volatility? Anything above the line, which means we've above the red area into the blue, it means it's expansionistic. So it's expanding forward. So we can see it's a little bit above there. It's about 105%, 103%, thereabouts. which is not too bad. Remember, it's comparing versus the previous week, and I've got a great slide here, which will really show you what's been going on. Okay, so this one is the normalized RPM growth from a base. So what I said was, if we look at the 1st of January and say that's the normalized RPM, what's actually happened to every normalized RPM since then? And you can see the curve there. And so it slowly went down in the new year as everyone began to panic because of COVID and all that sort of stuff. But then everyone thought, you know what, we got to get online quick. And so there was a surge. And you can see that surge in this particular, let me see if I can get my cursor across there. Oh, anyways, it's not moving, but you can see the surge. Actually, there it is there in this particular area here, and surged up, then dropped off as everyone began to say, well, it's actually COVID's not so bad after all. But then the second waves of COVID began to hit, and look, that just took off. It's like you couldn't get anything more linear than that, in fact, which just, it blows my mind. I'm thinking, what the heck is going on with all the information? So we're going to dig into that a bit more. Okay, so as we can see just here is the percentage of traffic, which, the revenue, my apologies, that Google's winning, which is in the blue, versus the direct advertisers. Direct advertisers basically flattened off. They're around the 25 to 30%. They bounce around a bit depending on if it's a weekend or not. And Google's up there 70 to 75% as we can see. So the direct advertisers still have a chunk of the revenue, but not as much as they had before. So what else is going on here? Now this is the traffic split. Now this is a bit more interesting. Is that what it's saying is this, is that the direct advertisers are surging forward with the amount of traffic they're winning. And we can see that there, and Google's losing the amount of traffic that it's gaining. But remember, they're getting more of the good stuff, which is Google's getting more of the revenue side versus the traffic side. So good news in this front for direct advertisers, and not so good for Google. But at the same time, Google's getting that lion's share of the revenue. So that's just the way it is. Okay, so this is the chart I love to look at. This is the one that everything hangs on in many respects. And I put I think this is the one, I've changed it so it's a 5th order polynomial trend line on both the red, which is the red curve, which is the direct advertisers, blue, which is Google, of course. And what we can see here in what's going on is that the direct advertisers really have flattened out on what they're paying for traffic. It's not nearly what it was previously. It really isn't. It's come right down from their previous highs and really now bouncing around. There's not very much bounce to it, in fact. And I wouldn't be surprised if that's a result of, like, particularly the finance categories are contractors. People aren't wanting to go along buy new homes and things like that. They're wondering whether they still have a job. The whole travel industry is contracted back to about a few percent of what it used to be. All those sort of things have really impacted direct advertisers. Now, the thing that Google has is the breadth of advertising. And you can clearly see that here. So as those weird and wonderful small to medium-sized businesses came back into the marketplace, they're after traffic, and this is just skyrocketing. I keep on thinking, you know what, where's it going to plateau? Where's it going to plateau? Where's it going to plateau? And it's not, which is a great scenario for domain investors. Let me tell you right now, ParkLogic and ParkLogic customers, like, we're seeing record day, one day after another, and it's just been, it's been amazing. It really has. So bring it on. That's all I can say. So if you're wondering about your own traffic and saying, I'm not seeing some of this uplift, bring it across here. See what we can do with it. But anyway, okay, so that's all good news. Now, I like this chart because it puts things into perspective. This is exactly the same numbers as we saw a second ago, except this time they're both using the same axis. This happens to be on the right-hand side there. So although Google is like, my gosh, Google paid so much more, it really isn't. It's still quite a ways below the direct advertisers. but it's nowhere near down compared to what it used to be. It really is accelerating forward. So what I'm looking forward to is in the coming months, are we going to see this whole market transform even further as we come out of COVID and we move into Christmas? Now that's going to be the killer. I think it's going to be just great. I must admit, I'm looking forward to that. Yeah, so let's see how it all goes. All right, this is like zoomed in the last 2 weeks, and you can see there's a slight upward trend still for Google is what we'd expect, because that's what we saw in the curve, and the direct advertisers a slightly downward trend. Yeah, I even thought of just having the trend lines here versus the other data points, but maybe I can do that another time. All right, so volatility. And you can see Google, we're comparing against the previous week once again, and Google in the blue is really flattened out. So what that means is basically it's just building on what was previously gained. So it's not collapsing backwards, which is a good thing. And the direct advertisers are just slowly contracting though. That's not so good. I really want to see the direct advertisers do well. So now this is a great chart. This is comparing the normalized RPM for Google compared to the very beginning of the year. Like I just chose January the 1st. Would it be a good date to choose January 1st? Maybe not, but anyway, we can argue about that another time. But I compared every day and as a percentage compared to January the 1st. And look at that curve. Like that blue curve there for Google, it's just like up here, they're close to 700% higher normalized RPM. That is massive. That is a huge groundbreaking trend difference. It's just, I must admit, I did these numbers and they blew me away. So maybe after this video, I'll just quadruple, quintuple check to make sure they're all right. But the direct advertisers, they look about right. They're just contracting a little bit. And you can see they've really suffered as a lack of those great big market verticals, which is like finance and travel and that sort of stuff I've already mentioned. So, great news. Like I'm going to be doing some more masterclass lessons. So if you've already completed the first 10, there's 2 more in the pipeline, which is fantastic. We've seen some incredible data which is happening right now. I would love it if you could just like or something like that, these videos, or leave some comments. Like, I love the feedback. Come on, bring the feedback on. So I can go and interact. It gets my brain thinking. I must admit, the comments that I have had already been extremely valuable. And some of the charts that we go through are a direct result of the comments. So if you're sitting there saying, gee, I wonder if Michael's got this data here, then ask me. The worst thing I can say is no, or hey, we can't reveal that, or whatever. But in the meantime, I hope you have a fabulous week, and I look forward to seeing you next week, and take care. Bye. I hope you enjoyed that video and you find them really valuable for your business and helping you make better decisions. Don't forget to like, subscribe, or pass the video on to your friends. Anyway, thanks a lot for that. Have a great day. Bye.